Hello, ladies and gentlemen, and welcome to another episode of 286 Project. On this podcast, we talk about arts, culture, politics, sport, and anything else we can think of. Now, in regards to sport, one of the biggest stories already this year has been the finances of football, in particular the English Premier League and financial fair play. And to sift through all of that, I'm joined by a financial football expert. His name is Neill Wood, and he's here to join me today. Hello, Neil.
Hi, Chris. How are you?
Yeah, not too bad, thanks. So, before we get into the meat and the bones of the football finances, can you just let everyone know who you are and what sparked your interest in football finance?
Yeah, sure. My name's Neill Wood and I'm a football finance professional. I run a YouTube channel and online education platform of the same name, Football Finance Professionals, having previously worked at City Football Group as with relatively a fair few senior finance roles. Prior to that, I worked at EY or Ernst& Young for the best part of 10 years as a chartered accountant, but I've always had an interest and a passion in sport, combining my interest and passion in sport with my expertise in finance. I once described my dream job as the financial controller of Manchester United or Manchester City, and went on to achieve that goal, being the financial controller of City Football Group.
Okay, so nice background there, and obviously that will help because so many questions I want to ask you about football finances because it's been in the news a lot. We'll start with financial fair play.
Yeah,
What is it? And also, if you after you explain what it is, we'll talk about the different teams in regards to their points deductions, how close they are to financial fair play. So, can you just break down financial fair play for us? When did it come in, and what, in layman's terms, of the state?
sure. So financial fair play was a concept that was introduced by UEFA, the European governing body of football, back in 2010, with a concept called overdue payables, which was basically to get football clubs to pay their bills on time. Over time, that's evolved into a variety of different domestic and European rules. But the term financial fair play is primarily referred to as what we know as break even, which is now known as football earnings in the latest iteration of UEFA rules, which broadly means that football clubs spend what they earn. There are various, like I said, various different iterations of what that looks like, and as it's evolved over time. It started in 2012 with this break-even concept, following on from what was known as overdue payables, and it evolves every sort of 3 years, or has done under UEFA. So it was revised in 2015, 2018, and then when COVID hit, it was revised again. And then after COVID, it's now named Financial Sustainability Regulations. Has been a bit of a rebrand and a rejig of the rules, and it's been its biggest iteration since its introduction. On top of that, from an English perspective, we have a variety of similar rules, but slightly different throughout the domestic competitions. Profitability and sustainability, as it's known in the Premier League and in the EFL and the Championship. And then as we go down the divisions, there's a salary cap or management protocol, as it's called. It limits the amount that you can spend on players' salaries. So it's quite a complex topic, to be honest. In its relatively simplistic format, it's an objective to try to make sure that clubs don't overspend from a profit and loss accounting perspective. It's all around accounting concepts. Primarily, do not spend more than what you earn, with some what I term reliefs or investments that you're allowed to make that are for the greater good of the future of the game, such as spending money on infrastructure, women's football academy, and community development expenditure, which are sort of common themes across both European and English domestic rules.
What I understand financial sustainability rules is that you're not allowed to have more of a debt than 105
It's
million.
Yeah, so it's debt is slightly different. So debt's a concept that you effectively take out money from a financing institution. It's so the concept of break even from a pure accounting perspective. Anybody that's an accountant would understand that there's no loss and no gain or no profit, but that's relaxed in the sense that UEFA allow up to a 60 million euro loss after adjustments in a 3-year period, and the Premier League allow 105 million of a loss over a 3-year period, assuming that the difference between 5 million euros over a 3-year period and 15 million pounds in a 3-year period, either in UEFA or in the Premier League, is covered by effectively equity contributions from the shareholders. So the break-even limits are relatively small. They're £15 million of a loss over a 3-year period, up to 105 million in England, in the Premier League at least. But the difference of the 90 million must come in the form of what's called secure funding, which is broadly equity contributions over that 3-year period from shareholders. And if you don't put that extra 90 million pounds in, then that loss is effectively reduced accordingly.
So you talked about reliefs there, like certain exceptions when it comes to finance, like infrastructure academy, women's football, etc. Do those extend to certain situations that clubs are in? So, for example, if you're a promoted club, do you
Yes.
get relief, or if you're, say, just been taken over, do you still have to play by the same rules in those two scenarios?
So when you've been promoted, you'll have a transition between, equally if you've been relegated, you have a transition between two different rules, or two different sets of rules governed by the EFL and the Premier League. The EFL rules are slightly different in that the loss limits are smaller. So you're allowed £13 million a year, so £39 million in total over a 3-year period, versus the 15 million or 105 million in the Premier League. So for every year that you're in the Premier League or in the Championship, you have to apportion the losses on a £13 million basis in the Championship and a £35 million basis whilst you're in the Premier League, which some might say is sort of counterintuitive, because you get more money when you're in the Premier League, therefore you shouldn't be making more losses, and therefore the limit should be smaller, but it's the opposite way around. And I can discuss why if you want me to go on. Well,
Yeah,
why
if
I
you go on,
really
because
care.
why
Yeah.
would
So, I mean, I think about this from a European perspective as well as a domestic perspective, and the Premier League is governed by its shareholders. So each club is a shareholder. So each club has a vote to change any of the rules, and it needs a 2/3 majority to be able to change any of the rules, which means that the clubs are almost governed by self-interest. So they would not necessarily want to punish themselves collectively or as individuals to make the loss limits small enough to cause an issue. So they are sufficiently relaxed for the majority of clubs to never really have to worry about them, or it'd be very difficult for them to really breach these, assuming that they've got this investment through equity. And the investment really is encouraged by the league, centrally, as well as the participants within the league, because it means that the English football in the Premier League in particular can become and has become the most attractive place to, one, do business and to attract the best football players in the world. And it has, it's undoubted that it's the, commercial juggernaut that it's become. You could argue that it is the European Super League by itself. Whereas other countries have set their stall out differently, and UEFA has set the stall. They don't necessarily have that domestic vested interest that a single country does. So from a European perspective, UEFA are trying to sort of treat everybody fairly as much as possible, and have to consider other European football clubs as well as those that are impacted by, and have the wealth of the Premier League. So they obviously want to make football sustainable, but also need to encourage some level of investment, because with the amount of money that's in the Premier League, if other European football clubs couldn't invest, then the Premier League will dominate all European competitions as well, which some argue that they're already starting to do, apart from the odd exception with the sort of historical established elite across European football.
So, say if I'm an owner, say I'm a multi-billionaire and I want to own a Premier League football club,
Yeah.
would is there an argument to say that FSR rules are a bit of a blunt instrument in that regard? Because if I want to invest and grow a club I've just brought, I will still be starting from the same point as everywhere else. So therefore, is there an argument to say, actually, can you have like a year, maybe 18 months, where the rules are relaxed for new owners, so they can at least use that time to invest and get to and play catch up, for instance?
Yeah, it's really an interesting question, actually. Never something that I've necessarily thought about from a new ownership perspective, because you're always inheriting what's happened in the past, because you have this rolling 3-year cycle, which has actually been a 4-year cycle over COVID, because of the fact that the 1920 and 2021 season sort of bled into each other. So the authorities effectively stitched the two seasons together from a financial perspective and took an average. So from the Premier League's perspective, we're still looking back into a COVID impacted set of years or set of seasons which sort of bled into one. But from UEFA's standpoint, they've actually reset the rules so that the FSR regulations now started again in 22-23, so the start of the 22-23 season. So everybody's slate was wiped clean, which is a different approach to that of the Premier League, which has kept the COVID impacted years. But it's never been, I've never heard it discussed that, at the point in which a new owner buys a club, that they should have a sort of free rein to invest X amount before they get impacted by the rules. And if that was the case, then you can imagine that, particularly the likes of Chelsea, for example, where they've really gone big on spending, then it would give them a distinct advantage, albeit obviously Chelsea are going to have their own challenges now. And the timing of the Chelsea transaction and the way that they're no longer in European competitions means that they don't need to worry about the smaller limits that are in UEFA's rules. They're now concerned about the larger limits that are in the Premier League rules. But no, it's not something that I've ever heard anybody even suggest, to be honest. It's quite an interesting one that you've raised that point.
Yeah, because I'm thinking of someone like Newcastle, for instance.
Yes.
I think they've got the world's richest owners, and yet they have to stay by these rules. I'm not
Yeah.
saying we should have the Abramovich way of doing things, but
Mm.
surely I'm just wondering there should be like a little bit of leeway because I mean I'm a Spurs fan, for instance, and it's taken
Right.
us years to get to a point where this summer we could actually benefit from FFP because we've actually done well from it. But
Yeah.
it's taken us years to get that point, and I'm just wondering, surely whether FFP and FSR are just two blunt instruments, and they just say, regardless of what situation, they just affect everyone.
Yeah, I mean, it really does distill down to what's the objective of the rules. So, is it to try to create a level playing field, or is it to try to promote sustainability? And the way that they've been rebranded, if you like, we've moved away from the term financial fair play, which suggests a competitive level playing field, or that's that it was never the case, because if you do something on a profit or loss basis, the clubs that earn more can automatically spend more. Now we're looking more at the word sustainability, and I think there's an acknowledgement that break even, as it was previously known, is not break even. So clubs are continuously, on the whole, apart from Spurs, losing money. Even Manchester United are now losing money. So I think the fact that the authorities continually have this sort of tension between trying to create a level playing field all across Europe, particularly from a UEFA perspective, but also allowing this investment is always, always a challenge that they're always going to face, unless they just scrap the rule book altogether and then think of something else to replace FFP as a concept, which probably looks more like, for me, a cash underwriting concept or a principle that is determined based on cash losses rather than accounting losses. For example, if a Saudi Arabian owner wants to put $1 billion into a club, that's their choice. But then you've got the counter argument on the competitive balance side that that just means that broadly the richest owners are going to win every competition that they participate in, because nobody will be able to compete from a talent acquisition perspective. And that's ultimately what all this comes down to, is the ability for a single club or a group of clubs to be able to attract the best football talent in the world.
As I said before, there are certain clubs that are going to benefit from FFP, and then certain clubs which are going to have to sell players.
Yeah.
So, two parts really. One, how is it going to affect transfer fees? Is it going to get to the stage where transfer fees might actually be lower to a certain degree because you need to sell your best players in order to meet FFP requirements, especially if they say they've got like a year left on their contract? And
Yes.
two, how's it going to affect wages? Because I imagine, again, with FFP, that's something the club could use to say, hang on, we can't afford it. Even the big clubs, we can't afford you to pay this, because if we do, we're going to be going past our FFP obligations.
Yeah. So I think, answering your first question, excuse me. Answering your first question, I think we've already seen in the January transfer window that the rules, or at least the threat of the rules, have started to bite somewhat. That it's not just the case that even the likes of Chelsea can just continue to spend it the way that they are, or the way that they've done in the past. And everybody's sort of looking over their shoulder and thinking, we don't want a points deduction. And it's the first transfer window that we've seen after the Everton points deduction that has effectively been like tumbleweed. There's been literally nothing to talk about, which it is January. We need to acknowledge the fact that most clubs do business in summer, but it makes a lot more sense for clubs to do business in summer because you've got obviously the pre-season preparation period, the ability to settle a squad, all of the non-financial factors that lead up to the start of the season, with a view to having a complete season with the same squad. January for me has always been a bit of a sticky plaster for any transactions that are going on, and particularly last year with Chelsea, that the volume that they did, particularly from a value perspective as well, it was a gamble to get into the Champions League that didn't pay off. But from the second point, I think it's quite an interesting concept that clubs will continually try to spend more money because it's the way to attract talent through paying more from a wages perspective, and also we've got agents involved, so therefore they're incentivized to get the best deal for their clients, both on the club side and from the selling club side and from the players side as well, because they often represent more than one party as part of a transaction. But what's been really interesting recently is the introduction of Saudi Arabia and the fact that they're effectively a deregulated market from an FFP perspective, and they're interacting with a highly regulated European market. That means that they effectively act like a release valve. So when it comes to transfer fees going up or down, you've got broadcasting rights which look like they're sort of flatlining at the moment, although there's probably still some growth in the Premier League's overseas rights. You've still got a theoretical potential unlimited upside from a commercial perspective. If a club can sell it, they'll sell it. They'll sell an official telephone partner deal to someone who wants to be the official telephone partner or official chair partner or whatever it'll be. If a club can sell it, it will do so. And historically, Manchester United have been fantastic at that sort of thing. But I think the real upside with the way that the accounting for player transactions is that player trading model where you buy low, sell high. And with Saudi Arabian PIF-backed clubs in the Saudi Pro League, it does mean that there's a potential unlimited upside, really, if they continue to spend the way that they did last summer, at least. And obviously they haven't done it in January. But because they do not have the restrictions of financial fair play in any form at this point, it means that they effectively disrupt, but also provide a huge opportunity to all of European football to be able to continue to spend. Because as soon as you inject that cash from outside the ecosystem, the profit then means that you can effectively multiply the amount of profit that you've generated on the player sale by the length of the contract, because that's the way that the amortization works on the acquisition side. So, for example, if you made £100 million profit on a player, you could then go and buy one £500 million player or £500 million players over a 5-year deal if you were able to sustain that £100 million profit into the future. It's not quite as simple as that. And the added complication now, from a financial sustainability regulations perspective, is that we've got what's called a squad cost rule, which looks broadly at wages and amortization over income, which includes income on player sales. And clubs have to comply with a new rule, which is a ratio of, it's currently 8, it's been transitioned from 90% down to 70% of effectively player costs above club income. So, by the end of, I think it's 2025, which is assessed on a calendar year basis, they'll have to comply with a 70% ratio of costs over income, as well as the traditional sort of what was break even, now football earnings calculation of loss limits as well. On top of that, there's also rumours at European level and even transitioning into domestic football, particularly in England, and it's rumoured that it'll go across all domestic leagues as being a sort of a hard salary cap across all of football, which would prevent clubs from spending it either at a team level a certain amount above, the limit hasn't been set yet. And I think it'd be quite difficult for that to be introduced, especially what we've seen with agent fee caps and how that's been disputed in various courts across the world, and primarily in English football, saying that's anti-competitive. There'll be a similar backlash from football players if their earnings are capped by the authorities because they've got limited earning potential and a limited career or shelf life to be able to earn as much as possible. And thereafter, obviously, they have to live their life for the next, well, up to, well, who knows, 40, 50 years as retired sports people without the skill set of a normal human, if you like, to be, to be able to have a relatively normal career. There'll be obviously there are options, and it's another headache for the football industry to try to understand. Partly what I'm doing is to try to help football players to understand the financial side of football, to be able to transition from being a footballer into another aspect of football, but using football as a medium to teach them about finance concepts. So there's a lot going on there, to be honest, in terms of salary caps and Saudi Arabia, and it's quite a complex landscape. But it's really difficult to predict the future. But I would imagine that transfer fees in particular will continue to rise. Salaries is going to be largely dependent on whether this salary cap can be put into place or not.
Especially in Europe, and I imagine if it happened in Europe, then it'll be implemented across the world. Would it be harder to implement a salary cap because you could just go to the European courts and say it's a restraint of trade, or I mean, there might be some legal loophole that clubs could use as a result of that?
Yeah, I mean, I think anything will be subject to challenge in the jurisdiction in which it sits. And I'm not a legal expert as such, but I know that each jurisdiction domestically will have its own challenges. And I think part of the problems from an FFP perspective, which when you look at it from a competitive balance perspective across Europe, whether we're talking salary caps or FFP or squad cost rules and things like that, is that unless you have consistency throughout the whole pyramid from FIFA all the way down to the National League or even theoretically below that in English football, then you're constantly trying to promote your way through a pyramid and then have to adjust for rules. So to get that consistency, you need all stakeholders to be on board, all the different governing bodies, which is really, really difficult to do. So I would imagine that there'll be an umbrella concept of salary cap, and then it'll be up to the domestic authorities to implement what they feel is the correct level within their jurisdiction. But I think all of it's going to be subject to challenge, to be honest. And I think organisations such as the PFA or equivalent will have a lot to say about anything that impacts their members, because ultimately, without football players, the game doesn't exist. So if they were all feeling like they're being treated unfairly in comparison to the previous generation or generations to come, then I'm sure it won't take long for them to collectively put legal action against, whether it's UEFA, FIFA, the Premier League, to say this is wholly unjust and unfair and against competition law. And ultimately, that is sort of what it comes down to, because if, let's say, it's on a club level or even a league level, if there's a certain cap that's been hit, it means that the talent will look somewhere else. That somewhere else at this point likely be somewhere like Saudi Arabia, who will probably not be captured by, unless it's a FIFA-wide concept. It's unlikely that they'd be captured by any of the salary cap related rules, unless they were to join UEFA, which would be quite an interesting thing.
Well, UEFA, I mean, I don't know what the future of that organisation is, because they lost that court case in regards to the European Super League. So how that would affect anything like financial, I mean, I have no idea, but it'd be interesting to see how that develops.
Yeah.
Speaking of teams, Everton, now obviously they've got this 10-point deduction.
Yeah.
Which is more than you'd get if they went into administration.
Yes.
Which seems ludicrous. Can you talk us through their case and where they lost the money?
Yeah, so Everton, it's a very, very complex case. Well, I say very complex. It's simple in the sense that it's one breach of the rules. Well, now two, because they've been punished again. Although we're still awaiting the appeal. I think the appeal is due. The outcome of the appeal is due tomorrow. We're recording this Thursday night. I think it's due this week to hit the press. So keep an eye out for that one. But broadly, the issues that Everton face are primarily driven by Farhad Moshiri, the owner of Everton Football Club, looking to develop a stadium as well as develop a football squad at the same time, both of which are extremely costly projects, and one theoretically being relievable from an FFP perspective, because like I said earlier, the infrastructure spend doesn't count towards FFP. But there have been particular issues when it comes to the way that Everton have decided to finance that stadium build. And that, in combination with multiple other things, primarily an expensive football squad that didn't necessarily click or perform on the pitch the way that it was expected to get Everton back up the division into where it believes its rightful places in European competitions. That, in combination with the way that the stadium was financed, which was primarily through Farhad Moshiri's own money, and a fundamental lack of understanding of the accounting principles that are associated with that, combined with COVID, a Russian war with Ukraine, and then some unfortunate things that happened along the way with certain players that they weren't necessarily expecting to happen, does mean that all of that sort of added up led to £400 million worth of losses over a 4-year period. When averaged out, I think it worked out to be about £286 million over a monitoring period, which is 4 years, but combined to sort of 3 years of an assessment period. And primarily, there are some things, and I have actually done a video on this on my YouTube channel. If anybody's interested, I'll provide you with the link for any more detail. But basically, without going into too much depth, one big issue which would have got them off the hook, if you like, was the capitalized interest or lack thereof from the stadium financing perspective. So they did create a separate legal entity for the stadium project, and that's normally done for a variety of reasons. It might be tax driven, it might be security driven, it might be to separate the project from the rest of the football club. But what it tends to do is allow for separate financing to be secured against that build. And if separate financing was provided from a third party, then it would have been a lot easier to provide to align the financing with the accounting standards, which say that if you have directly attributable costs that you can prove are directly attributable, then you can what's called capitalize the interest. So if it was a separate loan to that entity specifically for building the stadium and nothing else, then the interest, which in one season, in the season of breach 21-22, was just over £20 million that was charged between the football club and the stadium company. If that was capitalised, then we wouldn't have had an issue. Everton wouldn't have had an issue. They would have been within the limits because they breached by £19.5 million, and there was just over £20 million of non-capitalised interest in that season. So it shows, from my perspective, it was a poorly run club from a financial perspective. There was a lack of a football strategy there. Obviously, the combination of the financial, or the lack of financial understanding from an accounting perspective, and the knock-on impacts to FFP, because obviously, if the interest was capitalised, it doesn't end up in the profit and loss account, and therefore it doesn't end up in the FFP calculation. That means, well, in combination with other things like Alicia Usmanov's USM Holdings stadium rights deal, which didn't come through because of the obviously the restrictions that were put upon him. Although, I don't believe that should have led to any revenue being recognised, because the stadium's still not built. So to say that a stadium should have naming rights and there's some value there to the partner when the stadium's not yet been built, again, doesn't really align with the accounting principles. So I think that one's a little bit sort of clutching at straws. It would have been a benefit in the future if they were to able to, secure that deal. But primarily, I think it's more of a case of poor player trading, some unfortunate timing around COVID, which again is a judgmental area that the Premier League in particular has made more judgmental than UEFA, because UEFA said, when it came to COVID, well, look, the authorities didn't want any club to breach in COVID. It was very clear, because the rules, profitability and sustainability, or financial fair play, were put in place to try to prevent any financial issues through a distressed period of time for the whole industry. So both UEFA and the Premier League would have got together and said, look, we don't want clubs to be breaching the rules. UEFA suggested that COVID-related reliefs, so you could adjust your FFP calculation for COVID-19 lost revenues, whereas the Premier League said you can adjust for lost revenues and COVID costs. So it went beyond again, probably because of the same argument that we had earlier, that the Premier League clubs would have got together and voted this rule change in, and it has control of its own domestic rules. It would have basically said, there's more here, that we've incurred more costs as a collective, so therefore we'll allow ourselves to adjust even more. But even with that, and the fact that Everton would have put through some adjustments for player-related amortization, acceleration, or impairment, they still breached, and they acknowledged that they breached. It wasn't a dispute over that. It was a purely mathematical calculation in the end, whereby they went. The Premier League said that they went over by 19.5, and they said that there were mitigating circumstances as to the reasons why they did that. But ultimately, it was a breach. And then it comes down to the size of the quantum of the points deduction or another punishment, which you then have to think about it from a non-Everton perspective as well as Everton's perspective, because 10 points does seem excessive. But if you think about the knock-on impact of Everton being in the Premier League, it would have impacted multiple fixtures across at least the season that they were in before they were punished. And the Premier League have not been able to punish them in a particularly timely basis, because it's not been in the season when they've breached the rules, which is why they're now trying to accelerate the whole process, bringing forward the reporting deadlines to December for the whole league, which is why it seems like we've got a double whammy, because it was only, I think it was November when they were originally punished, and then it was December into January when they've been punished again. So yeah, it seems quite harsh, but if you think about it from the fact that the results that Everton has influenced in the whole season, they've played the 38 fixtures in a season when theoretically they should have been punished, whether that's a points deduction or otherwise. It's quite complicated to unpick the impact of that, because it would have impacted anything from European qualification all the way down to relegation, because Everton's played every single team in the league. They would have won some of the games, and obviously would have lost or drawn some of the games as well. So, and then there's a financial consequence for all the teams that have been relegated, of which theoretically Everton could have taken one of their places. So it does get quite messy quite quickly. And for Everton fans to say, look, we've been punished harshly, you could then say, well, put the boot on the opposite foot for Leicester or Leeds or whoever. Pick another team and say, look, they've suffered as well as a result, because if things had been different and Everton were to have been relegated, which you can't say whether it would have happened or not, because obviously you can't rewind time, then it doesn't then appear that it's particularly harsh. What will be harsh is, I think, having a double whammy in one season. But I just don't understand what the alternative is. And like you say, from an administration perspective, they almost would have been more. It would have been more beneficial to the club to just simply go into administration than take a 10 points deduction. Which again comes back to the objectives of these rules. Should we be trying to promote sustainability, or are these rules now actually punishing clubs to be even almost in a worse position than the alternative, which is to go into administration? Because ultimately, a 10-point deduction could quite easily turn into 15 with a second punishment. It could be reduced to, let's say, 6 or 8 points, and then go back up again to 12 or 16, or it could be a bigger quantum than it already is. And ultimately, that is going to theoretically put them at higher risk of relegation, which ultimately devalues the club and puts the club at greater risk of administration, and puts the whole existence of the club at threat. So back to the point, what are these rules supposed to do? Are they supposed to promote sustainability? Because if so, is a points deduction in any case the right thing to do? particularly if someone's at risk of being relegated, because there's one thing deducting points from 10th to finish from 10th to 12th, it costs a few £1 million, but then the difference between Premier League and championship status is astronomical. So it's a really tough one, to be honest. And ultimately, it's the fans that suffer. But again, you can argue that the fans of other clubs have theoretically suffered because they've been relegated or been put at risk of being relegated as a result. So yeah, really, really tricky one. And I think that a punishment needs to come probably in the form of the people involved in the decision-making process rather than necessarily the club itself, because ultimately the club is sort of inherently owned by the fans emotionally, if not financially, and there'll always be a backlash there when it comes to potential punishments. And it ultimately, of the 92 clubs across the Football League, the authorities want those 92 clubs to exist and continue to trade. So if we continually punish them in such a way that is ultimately detrimental to on-pitch performance and therefore financial performance, it's it doesn't, for me, doesn't tick the box when it comes to improving financial sustainability. It's almost doing the opposite. But then again, answers on a postcard as to what the best answer would be for that point of view. Because if it's simply a financial deterrent and a financial fine, then rich owners will just, like like I said before, they're just blunt instruments, because rich owners will just say, we'll take it on the chin as a tax effectively. So there's no real punishment there. Ultimately, a lot of rich owners want to perform on the pitch. They see these assets as trophy assets. So it's really difficult.
Yeah, I mean, it's a hard one because from outside looking in, I think it's harsh. As I say, if the verdict's coming tomorrow, I think it'll be a point deduction, maybe
Yeah,
to 5 or 6 points. I do think a point deduction is relevant now, because how would it affect other teams? Like, to give you an example, I'm not sure if it's still a case, but apparently, like, the teams that were relegated from the Premier League last season
yeah,
were apparently considering suing
yes,
Everton because they're saying, well, that affected us, which it actually did.
mm-hmm.
So it's a balancing act how that particular goes. And in a way, Everton are lucky because of the year we're in. They've got teams that are way worse than them. So
Yeah,
I think they've got more of a chance of actually staying up
yeah,
than they used to have. But with regards to, we talk about Everton, and obviously Forest are being charged as well.
yes,
How many clubs are at that brink of FFP now and really need a good
yeah.
transfer activity?
It's quite difficult to try to guess, because you're reliant on financial information being published for a start, which is generally, from a legal standpoint, needs to be published on Companies House, where all a limited company financial statements are filed 9 months after the year end. So most football clubs have a year end of June. If not June, then it'll be May. So you if it's bad news, then you're likely to have to wait until till March, or February if it's a June or a May year end, before you can get access to their accounts. Football clubs are almost like PR machines at the same time as being football clubs, and they're good at hiding bad news and promoting good news. So if there's a good financial story, it's likely that their accounts would get published on their own website before they'd go to Companies House. But if it's bad news, they'll make you wait. So the most relevant period that the Premier League now has is the 22-23 season, which ended 30th of June 2023. But we don't, as sort of mere mortals, we don't have that information to hand. So it's a really difficult question to answer. Even when you've got the information to hand, you then have to start estimating what the financial fair play reliefs or adjustments are, because that information doesn't form part of the financial reporting package that clubs have to adhere to. And again, this is part of the sort of problem with the murky world of football finances, that the level of transparency isn't there, even in the entities that have the highest requirements for transparency. So Manchester United, for example, has to adhere to an additional level of disclosure because it's a US listed company, which is almost the highest level of disclosure in the world. It still doesn't have to disclose its financial fair play calculations. So it's a very much a football nuance. But given given the lack of transfer activity in January, I'd say that there's going to be a lot that are nervous. I think we know about, obviously there's Manchester City, there's Everton, there is Nottingham Forest. I wouldn't be surprised if Chelsea were on the verge of breaching. I'd even argue that Manchester United potentially have an issue because, well, up until the investment that was signalled by Sir Jim Ratcliffe as part of the takeover, because they are operating within smaller limits in comparison to everybody else, because the Glazers have extracted funds through dividends, which is what's called a relevant expense from UEFA's perspective, which is partly the reason why they did breach UEFA FFP back in 21-22 in the old sort of set of rules. From a UEFA perspective, from now on, United don't have to be concerned because, like I said earlier, the rules have reset from 22-23 onwards. What they do have to be concerned about is profitability and sustainability, because they're still looking back in time at a period that was impacted by COVID, which included a loss of £150 million in 21-22 from an accounting perspective. But their limits are much smaller because they haven't had that equity injection from their owners. So you're looking at a £15 million 3-year limit after all of the adjustments. And by my estimations, they're sort of sailing pretty close to the wind when it comes to that. And again, you wouldn't expect a club like Manchester United to ever breach FFP because everybody assumes it's one of the established elite European football clubs that was almost, some argue, would be heavily incentivized to promote the rules or even write the rules to begin with, because once you set that limit with a certain number that are comfortably within that limit, it sort of locks in that established elite from a financial perspective, and people could then find it difficult to break into that group because you're restricted by the amount of losses that you can make. So the fact that Manchester United are even sailing somewhere close to FFP limits and have breached the UEFA FFP limits, albeit they were just fined, they weren't punished beyond that, they were fined €500,000. That is a signal to me that anybody could potentially breach. And the other obvious one is obviously is Newcastle, because they will be spending, with a view to becoming an established European football club. The only saving grace that they have is that Mike Ashley did run a really tight ship, so they inherited a really strong FFP position, whereas other clubs have been potentially running at losses and still have those losses to have to contend with. But yeah, it's quite difficult because of the lack of information that's out there. You can only really go off what's publicly available, and by the time you receive it, it's almost out of date. So the first that you hear of it will probably be through the Premier League at this point, especially because the Premier League have brought their deadlines forward. They've obviously mentioned Everton and Nottingham Forest being, in breach this year. But what was interesting from United's perspective is that Sir Jim Ratcliffe has committed $300 million as equity as part of the deal. So money changed hands between Sir Jim and the Glazers, but as part of the deal, he also committed to put in $300 million in, but he's not put it in yet. But it meets the definition of what's called secure funding in the Premier League, which is a commitment from equity participants to put money into the club, which is the opposite to the Glazer family and the way that they've run the business in the past, which instantaneously increases the loss limits from 15 million a year to 105, because you've got the difference of 90 being covered by a commitment from the equity participants, which made me think just before the reporting deadline that potentially Manchester United were sailing close to the £15 million limit. And again, it's all based on relative estimates. But yeah, there's just a couple of things that I've seen in the press as well that made me think that it potentially got an issue, but potentially would have had an issue if it wasn't for that transaction.
So how do Man City, because I know people watch this say, but Man City's charges haven't been seen yet and it's unfair. So two things. One, what are Man City charged with, the 115 charges? And also, why is it taken so long for it to be seen to?
Well, the 115 charges are more like 10 or 15 charges that sort of repeat themselves over a 10-year period. So whereas you had a relatively simple Everton have breached profitability and sustainability rules once, if not twice, and it was almost a mathematical calculation on a 3-year period, you can almost multiply that by, well, at least 10, if not, then add in some different things that have gone into the mix as well from purely from a financial reporting perspective. Because Manchester City's charges span from, I think it was 2010 all the way through to 2018, and profitability and sustainability it didn't exist throughout that whole period. So there's just different rules that they've been accused of breaching throughout that period, which, some of which are profitability and sustainability regulations, some of which are UEFA FFP regulations, although obviously they've gone through the UEFA case already. But the Premier League has said that that they should be punished from the Premier League's perspective for having breached UEFA rules. So they're not comparable in any sense, really. There's just multiple layers to. I mean, I think there were 40,000 documents submitted to the Premier League's Independent Commission for Everton's case. So you can probably multiply that by 10, if not 20, to sift through from Manchester City's perspective. It's just something that's going to take a lot more time, to be honest, is a lot more complicated.
I mean, I'm not going to class myself a financial expert at all, but with Man City, from what I heard, wasn't one of the charges the fact that they would make sponsorship deals and also use those as a way of getting extra money in, like off the side? I mean, I'm not sure how that works. Maybe you can explain it better than I can.
Yeah, so it's one of the issues was potentially inflated commercial deals, which is a judgmental area that means that someone needs to assess the value that was provided to commercial partners, which is a relatively judgmental, fluid concept. So it's up to someone. It should be someone independent to say, the value to pick the commercial partner was this much at this point in time. But with the greatest will in the world, if someone says, let's pick a value that the 40 million pounds was the value of a specific deal, then it wouldn't take much for someone else to pick that valuation apart and either increase it or decrease it, depending on which way you're trying to argue it. So part of the problem with that type of thing is, how can you assess the value that a third party is receiving on the back of paying an amount of money for the rights to be associated with a football club? It's a really judgmental area, and it's difficult at the best of times, especially looking back now with hindsight. You'd argue that any associated party with any party that's associated to Manchester City has got their value tenfold because of the football success and the journey that they've been on for the past decade. But you have to then take it back to the point in time where the deal was struck to see whether that was worth the money that was being paid or not, and ultimately that then gets recognised as revenue, which goes into the FFP calculation.
Okay. Yeah, I mean, it's an interesting one because the way the finances are at the moment. Do you think basically a big reason for this is because we have this governmental independent regulator? Because you said FFP have been started in 2010, but
Yes.
now seem to have more teeth. And I imagine that's mainly because of this independent regulator that's coming in that wants to from the government.
That's one argument, yes, for sure, particularly from the Premier League's perspective. So throughout COVID, and obviously with the threat of the European Super League, the Premier League actually went to the government and said, help, because we don't want our teams to disappear into a European Super League. So the Premier League asked the government for help to say, what can you do to prevent this from happening? And then that from there stemmed this discussion around potential independent regulation for the whole of English football, which would encompass the Premier League as well. And at the same time, you've got the Premier League then trying to give a lot more clubs a rap on the knuckles than it ever has, to try to, well, theoretically at least, to try to prove that the regulations as they currently stand and the whole environment as it currently stands is fit for purpose, and doesn't need any independent oversight from the government or anybody else. And part of the reason for that will be because the Premier League is a significant and dominant commercial machine, and you cannot argue with the fact that it is best in class when it comes to its ability to sell broadcasting rights, both domestically in the UK and overseas, and all of the participants of the Premier League get to benefit from that. So if there was any restriction to its ability to trade and negotiate deals on behalf of its members because of theoretical owners and directors test, which weren't governed by itself, or financial fair play or equivalent rules, which would restrict the ability of its clubs to do trade, to trade football players or to attract the best talent. It threatens the commercial viability of the Premier League, and therefore, it could be very easily argued that the Premier League is now showing its teeth, if you like, to make sure that the independent regulator isn't needed or isn't, it's not warranted at all, and it can stand on its own 2 feet. But it is broader than the Premier League, and I think, partly because the Premier League asked for assistance from the government in relation to the European Super League, and partly because they sort of got caught in the crossfire, if you like, because there's a lot of EFL clubs that have been struggling, and I think it's lower down the leagues that independent regulation is really going to benefit, because the Premier League historically has not had any financial issues to deal with. And if you remove all of the controversy around COVID and the Russian war and the way that the economy's gone, then you could argue that nobody would have, Everton wouldn't have breached. I suppose Nottingham Forest is different because, excuse me, because part of their problem is that they're trying to comply with these smaller limits because they've spent time in the Championship. So the fact that they've gone up and then spent a lot of money is almost their own fault, and there's obviously there's some arguments around the accounting treatment of certain players and things like that quite frankly, the accounting treatment is the accounting treatment. You can't really argue it, but the clubs should know what their limits are, and it's quite easy to say it's easy. It's relatively straightforward to do scenario analysis to be based on, if we were to finish 20th, 19th, 18th, 15th, 10th, whatever it might be in the league, then this is our budget, and therefore we can spend X. That needs to be done from a cash perspective, but it also needs to be done from an FFP point of view. And with a club coming up from the Championship, it needs to be considerate of the EFL's rules as well. Well, there's transitional rules between the EFL and the Premier League, and vice versa if you're going the other way. So, it's quite a tricky one, but I think the Premier League has been, or is going to be, impacted because the independent regulator is for the whole of English football and not just the EFL or the EFL and the National League. And I think there will be some good that will come out of it, but it's just where the rules are drawn, because what I see at the moment is that the rules are getting more and more and more complex. The Premier League rules are changing almost once a quarter because football's evolving that quickly, and it's quite difficult even for the likes of me to be able to say, right, well, this is the latest iteration of the rules. It almost needs a static position for quite some time for it to just calm down, because the latest rules are around associated party transactions with a view to trying to restrict or potentially try to restrict Newcastle's trading ability or others in multi-club models and things like that. So the world is a very, very complex place as it is from a regulatory perspective, to then overlay an independent regulator that, I'm sure will have the best interest of football at its core, but will have to sort of get its elbows out to be able to add some value and will no doubt slow things down from a transactional point of view, or have some layer of financial restriction. I'm not sure whether that necessarily means that the Premier League will continue to trade the way that it has done in the past.
Yeah, I think one of the things independent regulation might do, or put pressure on the Premier League, is possibly shared revenue. Say 20% of the TV rights goes to like the Football League.
Yes.
I definitely think that's one way. And looking at the Football League, it seems like there's been over the years, because I know people say there's like a lack of money compared to Premier League, but it seems like there's been not the greatest chairman in those football leagues as well. Would that be more to say that is more about what the chairman and what they've done, as opposed to the lack of money that's in those leagues?
Yeah, I mean, you could say that it's hard to pinpoint any specifics, to be honest, but I think the decisions that have been made in the past, because the offer that's been put on the table relatively recently from the Premier League to the EFL, it was exactly the offer that was given at the start of the Premier League, at which point the EFL turned that offer down. So, and I think that was a 25% revenue share, but I don't know off the top of my head. Um, and now they've been offered that, and they're saying it's not enough. So it's quite at the moment there's a bit of a standoff. But historically, you give clubs more money in the Championship in particular, they'll probably just spend it. I mean, the way that they're running their businesses at the moment is, the wage to turnover revenue, which so wage to turnover ratio is astronomical. I think in the finances that are out through on the Deloitte Money League, I think it's 108%, which basically says that's in 21-22 that for every pound a club generates in revenue, it's spending £1.08 on wages alone. That's not including player amortization. It's not including overheads. It's not including staff wages. Um, it's ridiculous, really, to think that is sustainable. So, a healthy wage to revenue ratio should be somewhere between 50 and well, probably up to 70, which is where the UEFA rules sort of make them sit, but that includes amortization as well. So the fact that it was running in 2021, which is a year that was impacted by COVID at 126% and then dropped to 108% in the year thereafter, it's almost a league that's on fire. And, partly because of the parachute payments as well, and the fact that three, if not more, because you've got leagues, you've got teams transitioning between the leagues, at least three at any point in time, clubs have the ability to compete financially way above the rest of the league because they've got these parachute payments, then fuels a dogfight for talent and, an ability to try to attract the best talent with a view to effectively reaching that financial promotion, which is something that all clubs are trying to aim for, to be honest, whether that's from Championship to Premier League or Premier League into European competitions. Excuse me.
So finally then, because we're almost at the end, and I know from a previous answer you said this is relatively difficult because things are changing all the time, but where potentially could you see more financial teeth in regards to what people can spend, outgoings, etc.? Like, for example, agent fees. Do you think they'd be more regulated in the future, or even something like TV rights?
Excuse me. Yes, I think FIFA's done its best to try to regulate agent fees with the agent fee cap. But it looks like that's going to come up. Well, it already has come up against some significant challenges. Um, it depends on your perspective. A lot of people say that agents provide a significant amount of value, and that's probably going to come from both players who don't want to negotiate their own contracts, but also they represent the selling and the buying clubs as well. Not all three together is not particularly good practice, but it's often that you'll get dual representation contracts between the player and, let's say, for example, the buying club. But the role of an agent is one that can drive value on either side. It can either be representing the selling club trying to increase the transfer fee, or it could be doing the opposite from the buying club and also trying to negotiate the best financial and non-financial terms for the player that's looking to move. But where I think that there's going to be potential upside, I think it's all going to be driven by the big six clubs, the traditionally big six clubs wanting to potentially become more innovative, potentially looking at a European Super League type model, which I think is almost inevitable, to be honest. The smaller domestic competitions are going to suffer because the fixture calendar cannot compete with any more fixtures, and the more lucrative competitions or the more lucrative fixtures will be the big European fixtures that theoretically a lot of people believe that they're worth more. So I think over time we'll see more intercontinental competitions. The FIFA Club World Cup is being touted as another European Super League or European Champions League type competition, but on an international stage that will probably include, well, it will include clubs in Saudi Arabia and beyond Europe. And there's only one way to make room for these, and it's to get rid of some fixtures. So either the Premier League becomes smaller, or domestic cup competitions become reduced in one capacity or other. The first thing that will go is replays, and then the domestic rights where it's at, really, because you get one party negotiating on behalf of the collective, which means from the club's point of view, other than performing on the pitch, which is obviously their primary reason to exist, they don't really have anything to do with the negotiations. Whereas if you're looking at a commercial partnership deal, for example, the club has to go out and generate that income itself. And the other alternative, well, the other two alternatives are increasing match day revenue, which means putting ticket prices up, or reconfiguring your stadium to be more hospitality focused than general admission. And then obviously player trading, which you can only sell a player once, although you can buy them back and sell them again. But there's only one of that player. You can't. It's not like there's a production line of widgets that's coming out and you just continually sell the same product over and over again. It's really difficult to get players through an academy system, but the ones that are obviously more successful will be able to spend more or eventually turn a profit if that's ever an ambition for football. I think it should be. But then fans may disagree, because ultimately if football clubs start to turn profits and they can't spend it on players because of salary caps or other restrictions, then football club owners will then ultimately just start to generate the profits for themselves and extract funds in the form of the dividends, such as the Glazers. So that model isn't a great model from a fan's perspective, because they expect the money to be retained by the club and be invested into the future of the club. So I'm not sure whether football will ever be profitable, because I don't think the fans would necessarily want that. If they were profitable, they'd want the funds to just remain in the club to be reinvested, I think, to the benefit of the club or the fans.
All right, cool. Like I said, it's been an absolute pleasure. I've learned quite a lot actually about football finances. If people want to find out your work, where can I go to?
So I've got a website, footballfinancepro.com, or on YouTube, Football Finance Professionals, or any other social media platform. If you just Google Football Finance Professionals, or even just Google Football Finance, I think I'm in the top 2 or 3. You should be able to find me by doing that.
Yeah, what I'll do is I'll leave a description to both the website and your YouTube channel in the description so people can check it out. All
That's
right.
brilliant. Thank you.
Thank you. Neill Wood, it's been an absolute pleasure. Thank you for coming onto the podcast.
No problem. Thanks for having me. Take care.
Take care.